Today, we're diving into an exciting topic that could change your financial future, turning just $25 a week into a staggering $5,000 a month using a strategy known as DRIP, or Dividend Reinvestment Plan. This concept revolves around investing in dividend-paying stocks and automatically reinvesting those dividends to purchase more shares. Over time, this compounding effect can significantly boost your investment portfolio, leading to substantial wealth accumulation. In this video, we aim to educate you on how small, consistent investments can pave the way to achieving your financial goals. Many people believe that significant wealth requires large sums of money up front, but that's simply not true. By committing to invest a modest amount each week, you can harness the power of compounding and watch your money grow exponentially. We want to motivate you to take that first step towards financial independence. Remember, every great journey begins with a single step, and in the world of investing, that step can be as small as $25. So, stick around as we explore the ins and outs of DRIP and how you can start your journey to financial freedom today. A dividend reinvestment plan, or DRIP, is an investment strategy that allows shareholders to reinvest their cash dividends into additional shares of the company's stock, rather than receiving the dividends as cash payments. This approach not only helps investors accumulate more shares over time, but also plays a crucial role in building wealth through compounding growth. When you reinvest dividends, you're essentially using the money you would have received to buy more shares. This increases your total investment in the company, which can lead to higher future dividends as the number of shares you own grows. The power of compounding comes into play here. As your investment grows, the dividends you receive also increase, allowing you to purchase even more shares. Over time, this can create a snowball effect that significantly boosts your portfolio's value. Many well-known companies offer DRIP options, making it easier for investors to take advantage of this strategy. For example, companies like Coca-Cola, Johnson & Johnson, and Procter & Gamble provide DRIP programs that allow investors to reinvest dividends effortlessly. By choosing stocks with DRIP options, you can set yourself on a path toward long-term financial success. Getting started with investing $25 a week is easier than you might think, and it all begins with opening a brokerage account that supports DRIP. First, research and choose a brokerage that offers DRIP options and has low fees. Many online platforms allow you to open an account with minimal initial investment, making them ideal for beginners. Once you've selected a brokerage, complete the application process, which typically involves providing some personal information and linking your bank account. After your account is set up, it's crucial to emphasize the importance of consistency in your weekly investments. Committing to invest $25 every week may seem small, but over time, these contributions can lead to significant growth. To make this process even easier, consider setting up automatic contributions. Most brokerages allow you to schedule regular transfers from your bank account to your investment account, ensuring that you never miss a week. By automating your investments, you remove the temptation to skip a week or two, keeping you on track toward your financial goals. Remember, the key to successful investing is consistency, and with just $25 a week, you can start building a brighter financial future through the power of DRIP. Selecting the right stocks for your dividend reinvestment plan, DRIP, is crucial for maximizing your investment's potential. When choosing dividend-paying stocks, there are several key factors to consider. First, look for companies with a strong history of paying and increasing dividends. A consistent dividend payout indicates financial stability and a commitment to returning value to shareholders. Researching company performance is essential. Analyze financial metrics such as earnings growth, debt levels, and cash flow. Companies with solid fundamentals are more likely to sustain their dividend payments over time. Additionally, consider the industry in which the company operates. Sectors like consumer staples and utilities often provide more stable dividends compared to more volatile industries. To help you get started, here's a list of recommended stocks with strong dividend histories. Coca-Cola, known for its reliable dividends. Johnson & Johnson, a healthcare giant with a long track record of dividend increases. And Procter & Gamble, a leader in consumer goods with a history of consistent payouts. By focusing on these factors and researching potential investments, you can build a robust portfolio that leverages the power of DRIP for long-term wealth accumulation. Effectively tracking and managing your DRIP investments is essential for achieving your financial goals. Regularly reviewing your portfolio's performance allows you to assess how well your investments are doing and make informed decisions about future contributions. This practice helps you identify any underperforming stocks and adjust your strategy as needed to ensure you stay on track. To simplify the tracking process, consider using investment tracking tools and apps. Platforms like Personal Capital, Mint, or Robinhood offer user-friendly interfaces that allow you to monitor your portfolio's performance in real time. These tools can provide insights into your investment growth, dividend income, and overall asset allocation, making it easier to manage your DRIP investments effectively. Additionally, staying informed about market trends and news is crucial for making educated investment decisions. Follow financial news outlets, subscribe to investment newsletters, and engage with online communities to keep up with developments that may impact your stocks. By combining regular portfolio reviews with the right tools and staying updated on market conditions, you can optimize your DRIP strategy and work towards building a prosperous financial future. Remember, informed investors are empowered investors. As you embark on your investment journey, it's important to consider how to scale up your contributions over time. One effective strategy is to gradually increase your weekly investment as your income grows. Whether you receive a raise, a bonus, or simply find yourself with extra cash, allocating a portion of that increase to your investments can significantly enhance your financial future. The impact of compounding cannot be overstated. As you invest more, the dividends you earn will also grow, allowing you to reinvest those profits and purchase even more shares. This compounding effect accelerates wealth building, turning small, consistent contributions into substantial returns over the long term. To maximize your returns, consider reinvesting any profits you make from your investments. This could mean using dividends to buy additional shares or even reallocating funds from other areas of your budget into your investment account. Additionally, setting specific financial goals can help motivate you to increase your contributions. By focusing on the long-term benefits of scaling up your investments, you can create a powerful strategy that leads to financial independence and a more secure future. Remember, every little bit counts, and the sooner you start, the greater the rewards. While using a dividend reinvestment plan, DRIP, can be a powerful strategy for building wealth, there are common pitfalls that investors should be aware of. One major error is neglecting to research stocks before investing. It's essential to understand the companies you're investing in, including their financial health, dividend history, and market position. Failing to do so can lead to poor investment choices that may hinder your financial growth. Another significant risk is emotional investing and attempting to time the market. Many investors make impulsive decisions based on short-term market fluctuations, which can lead to buying high and selling low. This approach often results in missed opportunities for long-term gains. Instead, focus on your investment strategy and resist the urge to react to daily market movements. Lastly, it's crucial to maintain a long-term perspective. DRIP is designed for gradual wealth accumulation, and short-term thinking can derail your progress. By staying committed to your investment plan and understanding that market fluctuations are normal, you can navigate challenges more effectively. Remember, patience and consistency are key to successful investing, so avoid these common mistakes and stay focused on your long-term financial goals. In summary, we've explored the powerful strategy of using a dividend reinvestment plan DRIP to turn small, consistent investments into significant wealth over time. Starting with just $25 a week may seem modest, but the key takeaway is that consistency is crucial. By committing to regular contributions, you can harness the power of compounding, allowing your investments to grow exponentially. We also highlighted the potential of DRIP as a pathway to financial independence. By selecting the right dividend-paying stocks and reinvesting your dividends, you can build a robust portfolio that works for you. Remember, the journey to financial freedom is a marathon, not a sprint, and staying focused on your long-term goals will yield the best results. If you found this video helpful, we encourage you to engage with us. Please subscribe to our channel for more financial tips and insights. Like this video to show your support and share it with friends or family who might benefit from learning about DRIP. Together, we can empower each other to make informed financial decisions and achieve our financial dreams. Thank you for watching, and we look forward to seeing you in our next video.